Hi, this is Zak Mir with the Bulletin Board Heroes on Friday, the 12th of October. Starting off with Angus Energy, where there was a little bit of a bear trap from below the, or bear trap rebound from below the 200-day moving average at 7.44 pence. Floor of this channel from May around the same level, and today we've seen the shares jump quite sharply, hitting that resistance line from August, which has been problematic, currently running around the 8.5 pence level. So looking for a weekly close today above that line and above the 50-day moving average at 8.13. If we can get that, then the long promised journey towards the top of the May trend channel at 13 pence could be on its way. End of day close back below 7 pence is probably the most viable stop loss on the bull argument at the moment, given the way that the stock is keen to bear trap people at the moment, apparently. Next up, a reiteration of Anglo Asian mining. Looks like we're in a mid-move consolidation here. Had a minor bear trap from below that late September low there, just around, what's that, 60.65 pence. Yesterday bounced quite nicely, a bit of a line of resistance, I suppose, from the beginning of the month, running through just above the 70 pence level. So end of day close above that should give us the long-awaited 95 pence target at the top of the May trend channel here as well. Stock which I've been eyeing up for a few days now, it looks like it's worthy of a mention, is Defenx. Here we've got a situation where the shares are in a falling wedge, so obviously on alert here for a breakout. Looking for 11 pence plus on an end-of-day close basis to give us initially the 17 pence technical target at the 50-day moving average. Obviously, one would want to see the shares back below 7 pence, but the big sort of situation here really is breaking that line from April at 11 pence on Defenx. Next up, another falling wedge situation comes in the form of Ironridge Resources, which has appeared in the rises and fallers on many occasions in the recent past. Here, the level to beat, probably 23 pence. It's also the 50-day moving average, the blue line there as well. And if we can get through that today or on Monday, then looking towards 26 and obviously a recovery that could take the shares back to where they were in April and May. Stop loss obviously back below the 20 pence level. Stock which I felt compelled to look at, even though it's been a rather painful experience in the recent past for many shareholders. You can see Prospex Oil and Gas specializing in bull traps through the 50-day moving average since April, so we've had several of those failures, giving this stock another chance just on the basis of today's gap to the upside. A bear trap from below that support line from April, but really you want to see an end-of-day close above the 50-day moving average at 0.34 to feel confident that the shares have finally turned around. But obviously it has to be admitted this is a difficult looking situation. No less difficult perhaps is PCG Entertainment. Here we do have a falling wedge and a reluctant breakout through the top of that, so let's say that's at 0.085. Want to see really 0.1 broken on a weekly close basis to get confident that the shares could have enough momentum then to get to 0.15 and beyond for this situation. But the setup is there with that falling wedge that has performed so well over the summer on many stocks. Finishing off with Thor Mining, where you can see this stock is breaking out of a falling wedge formation from the beginning of the year, also above the 50-day moving average at 1.8. So end-of-day close above that today would give us some confidence that the stock can head back to August resistance at 2.5 pence. Stop loss back below 1.65, which is today's intraday low. That's it from me. More updates on Monday.